Alright, looks like that we have sound this time, which is a luxury in itself. Sorry about last time with tap. The whole idea was short the stock at about $42.20. Target is about $37.50, and we're going to have a trailing stop risk of 85 cents next to the next highest close, and I'll explain that another time. Like what I mean by that. But anyway, today we're looking at Google. Now, we all know that Google's had like the best uptrend of any stock, maybe aside from Apple. Okay, Apple's had a bit more of an impressive uptrend, but still, Google's been going to the sky and not stopping since it initiated its IPO. But in this recent downturn, there is a small symmetrical triangle formation that has been forming, and actually, let's see, forming since about August 12th, so just about a month. So we have this triangle formation. We'll be prepared to enter into any side of it, but just to make sure, we'll be ready to enter any side of it. Sorry, I'm fumbling a bit today. But, of course, with this whole market downtrend, with this whole crash, with this whole correction, with all these price targets that for stocks showing up half of its current price, with the momentum signals, I think it's going to break out to the downside. Our targets are respectively 624 an upward breakout and 435 for a downward breakout. And 435 is actually, if we go to the 2-year chart, the exact low in the correction of 2010. Interesting how the targets always work out that way. Like, it's literally exact. Anyway, first, momentum signals. One, we had a down day on high volume. That doesn't mean too much. Next, we had a stochastic sell on the 7th, which was Wednesday. And those signals are usually pretty dependable when the market isn't trending, when it's in a sideways consolidation like that. So I wouldn't expect a failure, which means that this black line would suddenly turn up again and issue a buy signal. Wouldn't expect that, especially since it's kind of in the upper overbought territory, and it was there. Next, the relative strength index, neither overbought nor oversold, but also a small symmetrical triangle right here that actually broke down on Friday, just a hair. See right there, you have a little line peeking out of that trend line. And then finally, in the very short-term momentum, we have what looks to be maybe a rising wedge, maybe a channel, maybe something. The only thing that matters at this point is that there was a trend line, it was bounced off of, and then it was broken once again on Friday, saying that this might break out to the downside. So here are our orders. We will enter a short sale at 525, or enter with a buy at 541. I'd use a one cancels other order so you don't both buy and short sell at the same time. Oh wait, take it back. We'll enter at 541, or we'll enter at 513. Maybe I should move this over here. And target 620, target 435. If it breaks out to the downside, we're going to have a stop loss at 525, which gives us $12 per share risk. And what we're going to do, we're going to trail that stop for each day that the stock progresses lower. So for instance, like let's say I go back to tap here. Say I entered on Thursday and I entered at, let's just say $42.50. And it closed. I said I'm going to have a trailing stop of 50 cents for every day the stock closes lower. So my stop at this point would be $42.50 plus 50 cents equals $43. Next day it goes lower. I'm making money. It closes at $41.80. I add my 50-cent trailing stop to that. My new stop is now $42.30. And you continue to do that for each day it goes lower. Never adjust the stop upwards if the stock moves against you. So that's what we're going to do with Google, a $12 trailing stop like that, and you have to do it manually. There are not automated orders that will do that for you. And if we enter to the upside, our stop loss will be, see, we get in at $541. Our stop will be $530, which gives us an $11 risk. Alright, so there's your trade to start off the week. Now, well, there's a lot of uncertainty out there, so even though all the technicals say it's going to break to the downside, who knows? We'll find out, but we'll be ready for whatever happens.